So in this video, we will do the analysis of a base. Let us try to determine the quality of this particular base. Okay. So this is Ujjivan Small Finance Bank, and this is an old chart. This is November 2022. Have a look at this base. As per the regulations in India, I am only allowed to show you old charts. So this is way back 2-3 years. Okay, November 2022. Let us draw this base and let us do a detailed analysis of the base. Remember, base quality analysis is only one part of technical analysis. Okay, another part is to determine at what base count it is within the stage 2 confirmed uptrend. I am not discussing that. It could be base 1, it could be base 5, it could be anything. I am just focusing on the base itself in this video. Let's look at the quality of the base, irrespective of fundamentals, irrespective of comparative analysis, irrespective of relative strength or whatever. Okay, let's look at the quality of a base. So I will draw the base first. This is the base. So green zone, blue zone, red zone, you already know all of that. Yeah, so that's the base. Okay, so let's start our analysis. Point number 1, price should be above the 50-day, 50-day should be above the 150-day, and the 150-day should be above the 200-day simple moving average. Is that condition satisfied? The answer is yes. See, price is above the blue line, blue, green, red. Okay, 50-day, 150-day, 200-day. So the first condition is satisfied. This is a non-negotiable criteria. We need this. Okay. Within 25% of 52-week high, is the current price within 25% from the 52-week high? So how do you determine that? So this is November 2022. Let's go to November 2021. Here, November. This is November 2021. So what's the 52-week high from here to here? This is the highest price. So that's the 52-week high. So let's check. From 52-week high to closing price, it's only 6%. So it is within 25% of 52-week high. By the way, this is also a mandatory criteria, non-negotiable. Number of candles in the base. How many candles do we need in the base minimum? We need minimum 10 candles. This base has got 17 candles. How will you measure that? Well, just click here. This is candle that completes point 1. So click on this candle and then click on this candle. See, 17 candles. Okay. It doesn't count this candle. So anyways, we start counting from here only. So this tool doesn't count this candle. So it's favorable to us. Just put the cursor here, another cursor here, that will give you the number of candles in the base. If you want to count manually, see, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Then 11, 12, 13, 14, 15, 16, 17. Okay. Manual counting. How many points in the base? 5 points in the base. Well, let me draw the base for you. Let me draw the points in the base for you. So this is point 1. That's point 2. Well, that's point 3, point 4, and point 5. Okay. This is not point 3. This is point 3 because this is, see, the high of this candle is 25.50. The high of this candle is 25.50. So you take the latest one. So 5 points in the base. Is there a falling window in the base? No. If there was a falling window in the base, then the window needs to be closed. So good. The buy point is in the blue zone. So the high of this candle, which is 25.50, is the buy point. It's in the blue zone. Okay. 25.50. Okay, the buy point is in the blue zone. The closing price, latest candle closing price, is in the red zone, not favorable. Mother baby candle, yes. See, look at these two candles. This is mother baby candle combination. The high and low of this candle is within the high and low of the previous candle. Very powerful setup. Then shakeout, there is no shakeout. See, after point 2 is established, the price did not come down to undercut this low. So there is no shakeout in the base. What is the grade of the base? Look at the base height. See, from here till here, see 11%. So remember the grade of the base. If the height is 0 to 10%, that's a A grade base. 11 to 20%, that's a B grade base. 20 to 30%, C grade base. 30 to 40%, D grade base. More than 40% correction from the top, E grade base. Okay. So this is B grade base. Okay. Green zone closing. What is the meaning of green zone closing? Well, after point 2, I want to see how many candles have closed inside the green zone, or is the stock experiencing pressure. So in this case, the green zone closings are 0, which is not a good thing. Less than 5% distance to buy point. So is the closing price less than 5% away from yellow line? Yes. See, closing price. Is it less than 5% away from the yellow line? Yes. Good. So this represents tightness inside the base. Upward sloping moving averages. See, all three moving averages are sloping upwards. Okay. Now, favorable candles. This is something that I did not discuss. What is this 50% plus? Okay. What you do is, I will explain. First, you go here, convert this to a bar chart. Just click here. Okay. Convert this to a bar chart. Bar chart gives you three values for one bar: the high, the low, and the close. Okay. Now, if you notice here in this base, look at the red closing. Red means the candle has that day has closed below previous day close. See, in this, the color coding is red means the closing has been below previous day close, and green means the closing has been above the previous day close. Okay, let me repeat that. Red red bar means the closing on that day is below the previous day closing, and green bar means the closing on that day is above the previous day closing. Okay, so down closing, up closing. Do not confuse this with strong closing, weak closing, because that's a different concept. Okay, strong closing, weak closing for a candle depends on the midpoint of the candle. Here I am not talking about strong closing, weak closing. Here I am talking about down closing and up closing. Now, if you see most of these candles from here, see from here, from this candle, everything is low volume. So from this 1, 2, 3, 4, 5. See, 5 candles. Then these three, all low. 1, 2, 3. 5 plus 3, 8. Okay. Then another this one, low closing. 9 candles. So you have 9 down closings out of total 17 candles in the base, which means the stock has closed down on low volume compared to previous day closing 9 times out of 17 candles. Is that good? Of course it is good, because if the closing is down on low volume, which means institutions are not selling. Who is selling? The retail participants are selling. What do we want to see in the base? Retail selling, not institutional selling. If there were a large number of down closings on high volume, that is a problem. But see, out of total 17 candles, 9 are in our favor. I want to see when the candle closes down, is it closing down on low volume or is it closing down on high volume? So out of 17, 9 have closed down on low volume, which means retailers are exiting the stock, institutions are still there. Institutions are still there accumulating the stock. So this 50% means more than 50% of the candles are favorable to us. We want to see down closing on low volume. Okay, I hope you understood this. Let's see whether I missed anything. Price above the moving averages, 52-week high, candles, points, falling window, buy point, closing price, mother baby, favorable candles, shakeouts, grade, green zone closing. Green zone closing means after point 2, how many candles have closed in the green zone. Okay. Not a single candle in this case, which is not a good sign. It represents pressure. then less than 5% distance and upward sloping moving averages. So we have done our analysis of the base. Let's see what's the quality of the base. How many points are in our favor? First one is in our favor, second is in our favor, three, four, five. Sixth one is not in our favor. Remember what I taught you when the buy point is in the blue zone, we need minimum 6 points in the base. This base has got only 4 points in the base. So point number 6 is not in our favor. Point 7 is not in our favor. Remember what I had told you, the when the buy point is in the blue zone, preferably the closing price should be in the blue zone. In this case, it is in the red zone, not in our favor. Mother baby candle fine, favorable candle fine, shakeout no. So there are no shakeouts in the base. Preferably there should be shakeouts in the base, right? When this low is getting undercut. Okay, so this is also not in our favor. Grade is fine. A, B, even C should be fine. The stock should not collapse like 30, more than 30, 40%. Okay, grade B looks okay, which means the distance between point 1 and point 2 is less than 20%. It's tight enough. Okay, it means that the stock has not corrected more than 20% from the top. Green zone closing is zero. This is not in our favor, right? Because maybe there is upward pressure. Then the remaining 2 points are in our favor, less than 5% distance, upward sloping moving averages. Okay. So green zone closing not in our favor, shakeout and buy and closing price. So out of 14, 4 are not in our favor. 10 are in our favor. So it looks okay. I mean, it looks decent base, tight base, tight on the right side. So not all the conditions will be in our favor, although we would want it to be in our favor, right? But not all bases will satisfy all the criteria. So we want to see how many of them come close to our criteria. Remember, we have not looked at the base count, which is a crucial information for any base. So this, it could be base 5, it could be base 1. If it's base 1, then our position size could be different. If it is base 4 or 5, our position size could be different. So I'm not discussing all of that. I'm also not looking at the relative strength of the stock. I'm also not looking at the market conditions at that time. I'm purely doing the quality analysis of a particular base, and we will see the breakout that takes place. So this, since 10 out of 14 are in my favor, 4 are not in my favor, what should I be doing as a professional stock trader to mitigate that risk? Those 4 things that are not in my favor, what should I be doing to mitigate that risk? I will look at the relative strength of the stock if I want to buy the stock. Obviously, I will look at the fundamentals of the stock if I were to buy the stock, because if the stock were to go up, there has to be some reason. Either it is comparatively strong or it is fundamentally strong. So now if you see, this is November. So November means at that time we have the September quarter earnings. And by the way, this stock in September of 2022, September 2022, the EPS percentage was 200% growth in that quarter. And just a second, sales growth was 65% in September 2022 quarter. Okay. EPS growth 200, triple digit EPS growth, very good sales growth. Okay. At that time, if you go back and check the consolidated numbers from MarketSmith, I have already checked. Okay. But remember, I have not done market analysis. I have not done liquidity analysis. I have not done comparative analysis. This is pure technical analysis video. I am not even looking at the base count. So those are the things that I would look at practically before buying. Now let's see what happens here. If I were to buy, if other things were in our favor, I would buy it at within 1% range, right? So 24, 5.50, 0.50. I have a calculator here, multiplied by 1.01. So 25.75. So 25.75. That would be my buying range, correct? What would be my target? Target would be 25.50. multiplied by 20% up. So 1.20, which is 30.6. Okay, so I will draw a line. So 30.60, and the color would be green. And we'll put another target, which is 25% above the buy point, which is 25.50 multiplied by 1.25, which is 31.87. So 31.87. 0.87. See, so two targets are there. What about stop loss? 8% below 25.50. So 25.50 multiplied by 0.92, 23.46. So 23 point, and the color we will give as red color. Okay. So that's the trade. This is the stop loss. This is the selling range, the entire band. When the price enters that selling range, there is a case to sell the stock, maybe reduce the number of shares, maybe reduce the position size. Okay. Let me adjust this. So now we have all the levels marked, assuming we buy at the exact buy point. If we buy above the first yellow line, then the stop loss will adjust. It will move up slightly. The stop loss has to be 8% below our average execution price. Let's see whether the stock hits our. So the trade gets executed, and let's see whether it hits our. It starts to form another base, doesn't hit our, yeah, it meets our criteria here. It hits our selling range, enters the selling range. So it takes some time. How many candles does it take? From here to probably here, in 20 candles, in 24 candles. Okay, in 24 candles, it reaches the target. 24 candles means 24 working days. Doesn't even come close to the stop loss. Remember, before this breakout, what was the EPS growth? Triple digit, 200%. What was the sales growth? 65%, which is well above our requirement of 25%. Probably during that time, the market could have been in a uptrend, market condition could have been in an uptrend. Then relative strength could have been strong. I don't know. The relative past relative strength data on Market Smith, I don't think that is reliable. Okay, ideally, Market Smith should provide all of the information as on a particular date. I don't know how to extract that information from them. Maybe they are providing. I don't know. I haven't checked. But that is a trade. So this is 20% means 2.5 is to 1 reward to risk ratio. 25 is to 25% means roughly 3 is to 1 reward to risk ratio. So minimum 2.5 is to 1 is already present. So 2.5 is to 1 reward to risk ratio. That's the trade for you. So when the price enters this zone, so maybe on this day, or maybe on these days, or this day, there is enough time to sell at a proper level. And by the way, do you notice another base being formed? See from here, this is the buy point. See another base being formed here. Okay. So base on top of a base. So I hope you understood the analysis that we have done here. The purpose was to help you understand how to determine the quality of a base. Determine the quality of the base first, then go to then go to the base count, then go to the fundamental analysis. If the base itself is poor, like out of 14, if majority are not in our favor, why would you even spend time doing fundamental analysis of the company? Because if the fundamentals of the company were strong, then why does technically it look poor? That is the question we need to ask, right? And if you see in weak market conditions, the first condition itself is not satisfied. When the market is weak, majority of the stocks are trading below their 50-day simple moving average. So this system of analyzing a base automatically keeps you away from all the junk in the stock market. There are very few stocks which will come very close to this criteria. but that's how it should be, right? We have to be strict. We have to deal with the market on our terms, not on the market's terms. There are so many stocks that are trading below the 50-day simple moving average, which is the blue line, and people buy those stocks thinking that the fundamentals are great and the stock would recover. Well, it is their style of investing. Maybe they are investing, maybe they are not trading. Okay, maybe they don't care about overhead supply because their research about the company is very strong and they are confident about the growth of the company, but not us. We have to be buying close to the 52-week high because we don't want to deal with overhead supply. So this is the minimum viable base quality analysis that you have to learn if you want to become a professional stock trader. The reason why I say minimum viable is because it doesn't stop here. Visually, when you look at a base, you should get a feel of whether it's a high quality base or not. And that will come with experience and practice. The reason why I have created this checklist for you is to make things simple for you so that you don't miss out on important points. Okay. I hope this video has been helpful. I think I will make a lot of videos of this style so that you become a master at looking at the base, because checking the fundamentals, checking the comparatives, that is not a big deal. Anybody can do that. In fundamentals, what do we check? We only check sales growth, EPS growth, ROE, and margin. But in technicals, there is a lot. There is a lot to talk about. I give a lot of weightage to the technicals. Even comparative analysis is simple. Liquidity analysis is simple. If the stock is not a penny stock, if it has good volume, like more than 200,000 shares traded, I mean, it has decent liquidity, right? The main game is played when it comes to technical analysis, especially for positional and more importantly for swing traders. Okay, for swing traders you have to be even more strict than what I have discussed here. So we will look at multiple examples of this style. I will make this style of videos because I can show, this allows me to show you old charts as per the regulations in India. And since we are looking at old charts, I can't do like proper market analysis, comparative analysis, because I don't have the data, past data on MarketSmith. I wish they could provide. But even if you understand this much analysis, I mean, you are coming very close to becoming a professional stock trader. Thank you so much.